Hello everyone, welcome back to CryptoCache. Thank you very much for joining me here. Hope you're having a fantastic day. Happy, what is today? Thursday? I think it's Thursday. I'm losing track of my days here because I haven't been feeling so great, but on the same accord, I am feeling slightly better today with a funny voice. So I hope that it can communicate effectively here today. But what we're going to do is take a look at Bitcoin, of course, help understand best practice, big picture, the whole 9 yards there, and obviously help understand what's going to happen next. It looks like it's working itself into somewhat of a channel. We might be range bound once more, and we'll kind of look and see if that is a reality here for us. That being said, I'm not a financial advisor, love teaching people to trade. I really hope you can learn something here today. If you do learn something, obviously, let me know. Love to hear it. Appreciate all the feedback, positive, constructive, whatever. Definitely let me know. And if you want to become a better trader, CryptoCache.tech is a site, link in the description below. I offer a trading academy, community, and signal group. Really awesome to see some new members coming over there here recently, just because everyone's trying to learn how to be better during a bear market, and that's the best time to trade and to learn how to trade. Yes, it's a little more tumultuous, and you can have a little bit more learning occurrences there, but once you learn a lot more, you become better, and those are things that I like to teach. So once again, a little bit more of a conservative approach to cryptocurrency. That being said, taking a look here at Bitcoin on the daily, obviously it doesn't look great, but we had a nice recovery yesterday. So of course we had this 7.5% correction here, and then yesterday was pretty much cut that in half, so it increased roughly 3.5%, and now we're kind of drawing dead, so to speak, right at this support level here at 19,200. Now I say support because it technically isn't a resistance yet, but kind of is still, so it's still defining itself. But the key here that we need to understand is 19,800 is a key level resistance, and 18,500 is a key level support. So we'll likely be range bound in that area for some time as a distinct possibility until we break either above or below these descending trends that we have here, right? So we've got a very long-term descending trend up here running concurrent with a 20-day set moving average. Then of course this more recent descending trend as well. So the key I would say is to be able to, another 2 or 3 days and we close above that, that'd be helpful. I'd really ultimately want to be above this descending trend though, because that is the biggest, the bigger one. That's essentially defining the bear market itself. All right, so we could say that we're no longer bearish once we get back above that. We had a point in which we did break a previous descending trend, but it didn't hold for very long. So again, with time gives confirmation, right? So let's take a look at some of the standard stuff here. We can see we're bouncing off 30 on the RSI once more. That's pretty standard stuff. The price is kind of trying to come back down again. It'd be odd for the price to continue any lower in the immediate future. It would make more sense to see another one of these before we see the next next decrease. So hypothetically, we'll do one of those once more and then decrease again, right? That's essentially how it typically works with descending type of trends. It's not going to just all be at once, right? So we're going to average ourselves out, probably range bound once again between 18.5 and 19.8. Those are essentially the ranges that we're dealing with right now. Taking a look at the MACD, not much to note there, kind of trying to converge, but still it doesn't have enough momentum to do so. So for lack of better terms, on the daily, it looks overall bearish, even still, but I wouldn't be surprised if we see the price action try to retest 19,800 and likely get rejected. That would make more sense right now. So I'm actually considering taking a position here soon in the 19,000 range, maybe with a second entry right around 18.5, 18.7, and effectively, taking along up to, take profit targets just before 19.8. Because there is some profit to be taken in that range, but again, we want to wait and see how much, how much lower this will go, right? And what I mean by lower, if we can take a look at the 4-hour time frame, kind of smaller time frame, you can see that even though we have a nice doji type of ascending candle here, we can see the current one is engulfing, of course, and effectively decreasing. But a lot of times when you see the price action kind of working itself into a wedge, it can effectively break to the upside once it breaks through resistance level, and we can see the 20-day SMA is working as a resistance tentatively. All right, so again, mostly positive there, but once again, also slightly negative when you think about it, because we're getting rejected off of 50 in the RSI. And that is pretty standard because it's running concurrent with these moving averages here. Okay, so again, not fantastic, but not terrible, all right? Same thing occurring here as well with the MACD. We're starting to lose that convergence, so to speak. Not to say that this is telling by any stretch, but it is telling us we're losing that momentous trend to the upside. Again, range-bound activity tends to do this, right? So I wouldn't be surprised if the price comes down to bounce off 19,000 and essentially comes up from there. But once again, there's a lot of buying pressure at this level here. So if we saw the amount of volume here recently, it did increase when the price action came down this low, and it hasn't subsided yet. All right. Another thing to also note too is traditional markets are, well, Nasdaq's doing well, S&P drawing kind of dead, but dollar index, US dollar currency index, is essentially increasing. Okay, so we got to be mindful of that too. When these are good days here, right? Bitcoin's going to have bad days. So it's no surprise we're seeing these two red candles based on the dollar index having two green candles in the last 8 hours. Okay, again, they have a tendency of being the opposite of each other. So that's kind of where we're at there in that sense. Just kind of drawing some perspective there for you. When it comes to the hourly, we can take a look, of course, at TD sequential and kind of see we've obviously had this extreme exhaustion here, and we came up to a 9, and of course I had some traders in my academy, or community rather, they actually shorted Bitcoin from here to here, and it was a good call because of the fact that we were overextended, right? We hit a 9, we had this little ramp up, and it was likely overextended as well on the Bollinger Bands, if I'm not mistaken. Yep, and obviously when you see that happen, that's a prime opportunity to be able to short or just reverse the direction of which it's going. Okay, so again, a lot of times you can do these overextension plays that work very well. That's a very common practice in the industry, so maybe consider looking into that in the future. But generally speaking, that's what we're looking at here. In other words, TD sequential, we're getting a lot of resets, consolidation with previous 9s in a row, right? So we got a strong 9 to the downside and a decently strong 9 to the upside, both providing reversal signs. That being said, not a lot of signals here right now telling us that it's going to want to go either way, up or down. It does pretty much indicate that it's just consolidating at this support level and or resistance level. And again, it could work as either. We don't know just yet. The price action hasn't closed above it yet, but 19,200, it does appear to be somewhat of a strong resistance and potentially even a support depending on how it works. So we need a little more time for that to define itself. One thing we can see here, though, is that the cloud is effectively rejecting the price action and that it doesn't really give us a buy signal yet. Had we had a closure, just say around 19,300/400, we would have maybe had a little bit more confirmation, the price action continue higher. But generally speaking, when you see the cloud rejecting like this, that's really kind of a distinct indication that the moving averages are working against us. Also, lagging span is intersecting with the price action soon, so hypothetically you should wait to take a position, unless of course you're taking an average down position, which I like to do personally. Again, different strokes for different folks, but I'm more of a swing trader, I guess a short-term swing trader than I am a day trader, at least anymore, just because I don't love the stress of having to look at the charts all day long. And when it comes to swing trading, you want to be cautious and careful and wait for confirmation, but you also can, if you are feeling like the price action is going to increase soon, because we've got some decent factors here positively to the upside, at least in the short term, then what you do is you'd consider taking an entry now, just say 19,100, and you'd have a second entry target, just say closer to the most recent low, right here back at about 18,600, and that would be your second fill. So heaven forbid the price action comes down, you don't get your fill, you still have at least 50% of your position in, right? That is something that a lot of high-level traders will do in circumstances like this when the price action fluctuates so much. Okay, so again, something to consider. I like doing it personally just because it ensures that the price action continues higher, I still get filled, and then of course I have an opportunity to be able to average my price down, because 19.1 and 18.6, that'd be in the range of 18,800 or 900, somewhere in that range, right? It would be a positive cut in between, so to speak. Again, prefer you wait for confirmation, but that's just kind of a little tool to maybe consider using in situations like these, because again, the price action is in the cloud, and typically it's best not to take a trade while you're inside the cloud because you don't have confirmation one way or the other. But the key here is that the cloud is effectively still holding the price action in place on the downside as well. You can see it's happened twice already. So it is apparently range bound for the moment and could very well increase from here. Okay. Again, that's kind of where we're at there. So all in all, Bitcoin is not looking terrible, but it's not looking great. I know that seems like a complete contradiction, but that is cryptocurrency for you. And you got to get on board with that being a reality of part of your trading lifestyle if you're going to trade the crypto market. It's very tumultuous. You got to roll with the punches, and sometimes you got to wait a little while for things to convert. So appreciate your patience too as well from my current community members. Our targets will hit. It's just a matter of time. Planning to send out some new signals here, likely for Bitcoin and a few others, perhaps BNB and Ethereum as well. I'll take a look at that next. But thank you so much for joining me here, of course. Hopefully this provides some insight for you. Comment below if you have any questions, and obviously CryptoCache.tech is a site where you can learn to become a better trader. I look forward to working with you. Hope you have a great rest of your day. Thanks for your time.